Hey guys, hopefully everyone is doing well. Today's target is to solve question number 26. The chapter which we are related with is financial statement, where profit and loss statement and balance sheet statement would be made. And here there is a little bit comfortable situation today because you can see that there are two separate columns. Debit column and credit column is available. Beside this, you can see total of debit side and total of credit side is also available. It means it's absolute trial balance with which how we will comfortable when trial balance is given because assets and expenses are segregated and separated. Both assets and expenses are written on debit side and liabilities and incomes are written on credit side. So it would be little bit easy for us to pick whether it's an expense or asset, liabilities or income. Second part, as usual, you can see that we have additional part and that is adjustments in financial statement. 10 adjustments are given over here. So as usual, our pattern would be same. We will be making four parts, and here you can see first part is at your left side. This is direct side and then indirect side. Upper part is fixed for the direct side to calculate gross profit. Lower part is fixed to calculate your net profit or loss. At right side, it's balance sheet, and here we have asset side, and then lower part is fixed for the liability side. Total of asset and liabilities would always be equal. The third benefit which we do have is answers. They are already present at bottom of question, so it means we will not be having any doubt, but in examination these answers would not be available. The vital point in financial statement is your total of asset side and total of liability side would automatically be equalized, which will almost ensures you, which will almost, why I'm using almost, I will tell you, which will almost ensure you that your question is okay. But unfortunately there are compensating errors as well. I'm sure that in rectification of error chapter you have an idea of compensating errors. If an error you are making on debit side and same amount error was made in credit side as well, so it would compensate each other and your balance sheet would be equalized. So that is why I was using the word almost. So it was a brief introduction of the question. We are ready to start. Let's begin. Since it was told you that we will start from adjustment side, so first adjustment is saying stock. It's 31st December, it means a closing stock, so you will come in cost of goods sold statement. There you will write opening stock and then you will add purchase. After that you will write returns less closing stock, and we have little extra space. Let's see if there is any amount related to cost of goods sold statement but not present in normal case. Stock 102,000, just put amount in front of it, and as its second effect we will go to current asset side, and there we will write 102,000. So two effects. Each adjustment does have two effects. You can see one at the left side in profit loss statement, second in the right side. At the right side we have asset side. So both effects completed for the first adjustment. Now let's see for second adjustment, increase. This is very important word, increase, but please be very sure that it should have the second word, second associated word should be by. But here you can see increase bad debt provision 2. So you don't need to be worried about its initial word increase. You will be adjusting it in a normal way, we will go to operating expenses side. There you will write bad debts, and then you will add additional bad debts, then you will add new provision, and then you will subtract old provision for bad debts, and this would be your new provision for bad debts. We will be starting our procedure from current asset. Here you will write sundry debtors first. Let's see where sundry debtors are, and we don't have sundry debtors, so instead of sundry debtors we will use account receivable. Here you can see on account receivable. Sundry debtors we have written, that's okay, but for your convenience I'm going to write account receivable, amount of which is 192,000. Write down over here. Now you will search for any additional bad debts which would be present in your adjustment. It's very important to search, and we are unable to see. It means additional bad debts are not present, 0. And then you will calculate new provision. And how you will calculate? Look, these were sundry debtors, 192,000, no additional bad debts, so it means 192,000 would be taken, and at this stage we will see how much rate of provision has been set, and it is 5%. You will be calculating 5%. Alright, now what I have said, 192,000 was amount of debtors, and it was said to create provision for 5%. Alright guys, so final amount of this 192,000 was amount of debtor. No additional bad debts. You will subtract new provision. So this would be the final amount of sundry debtors. Once one new matter, you are observing that I have highlighted this amount. There is a reason, and later on you will come to know that reason. For we do have 9600. So let's get back and write down 9600 in front of new provision. Operating expenses, additional bad debts are not given. It means both additional bad debts and new provision are now having two effects: one left side operating, one right side current asset. In this way our second adjustment has been completed. Now third, provide discount reserve on account receivable 2%. This is what I was saying, why I have highlighted it, and here note it very carefully. Discount on account receivable. Once again I am letting you know what is said. Provide discount on account receivable. Now actual amount of account receivable was 192, but please note it down. You will have to see if additional bad debts are present. You will have to see if new reserve is present. Then you will subtract both of these additional and new provision from original amount of debtors. You will get final or net amount of debtors. Here the point to be noted, you will calculate discount on account receivable to the final amount. Please note very carefully, you will not be calculating this percentage upon original debtors. Rather, you will calculate this percentage on the amount which you have calculated at last step, where you have subtracted both additional bad debt and new provision from original debtors. The last amount which you will have will be used to calculate discount on debtors. So 182,400 was the last amount, and then multiply by 2 divided by 100 to get 2%. Let's check it out again. 180 to 400. 114 was extra. Let's cut it out. So 3648 is discount. And further, it would also be subtracted from amount of debtors. So final amount we have got 178752. And this 3648 discount on debtors would also be the part of this statement, and this discount would be added, discount on debtors, because it's an expense. So here we will write the amount which we have calculated, 3648, just put over it. So guys, in this way 3 adjustments are completed, and you have seen that double effect of first, second and third. All 3 adjustments were having double effects. Number 4, depreciation on machinery, 5%. For that we will be going to fixed asset side. Here we do have, where you will mention your machine first, and the amount of machine given is 69,000. Here we are going to put 69,000. Now we will see the rate of depreciation, which is 10%. You will subtract depreciation, and it is said to calculate 10%. 69,000 was the amount, and you will take 10%. What is 69,000? That is amount of machine, and then why you are taking 10%? Because it is said in adjustment. So we have got the amount of depreciation. We will go to operating expense side, and there depreciation on machine you will mention, and I think it was 6900 which we have calculated. Yes, it is 6900. So you can see first effect was to subtract from asset 6900. Secondly, show it in expense side. Double effects are completed for fourth adjustment. Next is 5. Goods taken away by the owner for personal use. The journal entry for this adjustment, you know very well, drawings to purchase. And since purchase decreasing, so you may increase one line over here. We will wait for less drawings. Returns we are not deleting because we will wait. Might be possible that we would have returns as well. Drawings amount is 2400. So first effect is completed. Now you will go to fixed liability side, where you will put first capital, then less drawings, then you will add net profit. Right now we are related with drawings, and amount is 2400. In this way you can see both effects are completed for adjustment number 5. Then we have machinery purchase 6000 wrongly included in purchase, another adjustment related to purchase. So let's put this closing stock further down, and here note carefully what is said. Machinery purchase 6000 wrongly included in purchase. So since it was wrongly included in purchase, you will subtract because it was wrongly put. So less wrong entry, and amount was 6000, put 6000 over here. The actual amount was related to machine, so you will add wrong entry in purchase, amount was 6,000. So read it again, machinery purchase. It was to be added in machine. Look, now we have added since it was wrongly added in purchase. So subtracted from purchase, added in machinery. In this way, our adjustment number 6 completed. Stock of stationery wrongly included in closing stock. So what you will do, since it was wrongly included in closing stock, you will subtract from here less wrong entry. The amount of wrong entry is 1800. You will put 1800 over here. Now here there is a problem. What you will do, you will arrange it in a different way. Please understand, it is very important. Here you will calculate your closing stock. Amount of closing stock less wrong entry, and you will choose this closing stock instead of this. And remaining amounts we will be writing accordingly. First effect is completed. Stock of stationery, that means there are two things we can do. If stationery is present, let's do, okay, this is your stationery 19,200. So you may subtract this stock of stationery from here, and secondly you may post it to the asset side. We are going to choose asset side. So here we will write stock of stationery. Once again I'm telling you, stock of stationery at 31st December, that means it was closing stock, 1800 would be written over here. Second method, what I have told you, that you will go to indirect side and you will write stationery subtract closing stock. So we will see what book writer had done accordingly. If our answer is not being matched with this, what we will do, we will take the second option. This stock would be subtracted from printing and stationery. Right now we have chosen the option to write it at asset side. Seventh adjustment is completed and we have done both effects, subtracted from closing stock and written in current asset side. 8. Apprentice fees adjusted for 4 years. Apprentice fees is paid or received? We'll have to check. This is received. That's very good decision to see first. Apprentice fees received, we will go to operating income side and here you will mention apprentice fee and you will adjust it for 4 years. So here first we will see how much amount of apprentice fees is, and this is 4800, though there is a huge distance between amount and narration, but I hope it's 4800. So here 4800, and it is said to divide it into 4 years, so multiply by 1 divided by 4. With this way this apprentice fees will be adjusted. 4800 is what? The amount of fee, and then you will take 1/4 part and this would be written in operating income side. So what will happen for the remaining? Since it is income, remaining part we will write on liability side, since that was received in advance. So apprentice fee. How much advance payment would be considered? It's very easy. Out of 4800 related to this year and remaining 3600. How? 3/4 remaining. So 4800 multiply by 1 divided by 3 divided by 4. So we will get 3600. It's very common sense. If out of 4800, 1200 is related to this year, then the remaining amount we have received for the incoming year, which is pre-received should be considered liability, so 3600. So guys, we have seen that eighth adjustment was having two effects we completed. Ninth, carriage paid to bring machinery 600 included in printing and stationery. So first we will see where it was actually be added. Carriage paid on machine. It was part of machine. So here you will write add wrong entry in printing. So this is amount 600 which would be added. And since it was wrongly include carriage paid on machinery included in printing, so you will come over here in operating expenses. Here you will write printing, and then we will see what was the mistake. Once again we'll have to see it. Carriage paid, okay, actually it was amount related to machine, but we have included in stationery. So you will subtract from here print where it had gone. Okay, why this old provision is present over here? This is not needed. So printing less wrongly added, and we see how much amount they are saying, that is 600, and this 600 would be subtracted from here. So guys, you have seen that first effect, it was wrongly entered in printing. We have subtracted 600. Actually, it was part of machinery, so we have added 600. Now, 10th adjustment, stationery purchase included in salaries. Here you will come to operating expenses. Printing and stationery was collective amount, I think. Yes. So we'll come to printing again, printing and stationery. Now let's read it again. Stationery purchase, it was actually amount of stationery. So here we will add stationery purchased. Amount of stationery purchased is 2400. So just put 2400 over here. Now second part we will see what happened. Included in salaries. It was not supposed to be written in salaries. So here we will mention salaries less wrongly added, and that was 2400. And we will be saving one line as well. Why? Because I have told you that this stock entry, there are two possibilities, and we have chosen the option to write stationery on asset side. But since it was closing stationery, if let's say we'll have to do, we will subtract from here instead of writing, and as on asset side we will subtract it from here. That is why we have a blank line. It means all adjustments present over here are completed. Now we are going to enter each element present in trial balance to our statement. So let's start. Drawings, it's part of fixed liability side, and here I think we have reserved a space. Drawings already written, it means these are new drawings, or instead of new we should just write the drawings of trial balance. Amount of these drawings 42,600. Let's write 42,600 is amount of drawings that has been completed. After drawings, we have machinery 69,000. It is written already. So machinery 69,000 is written. Opening stock 87,600. So here you will write 89600 opening stock. Opening stock 87600. Oh, we are 8. I again forgot the amount. 87600. So here we will mention 87600. When you are writing dozens of amount at the same time, so possibility of human error would always be there. Your focus, concentration can save you. And I was writing actually 87,600, but due to this factor, what happened? I wrote 89600. And you know, after completing the question, it would be very difficult to see where that mistake was. Opening stock 87,600 completed. Now purchases 6 lakh. So here you will write 6 lakh purchases completed. Now capital is 255,000. Here 255,000. Its space was already reserved. After capital we have sales 714,000. So here 714,000 is amount of sales. After sale we have got returns less return, amount of sales return 12,600. Then we have purchase return, amount of purchase return 11,400. Its space was also reserved. Purchase return. Then we have got salaries 26,400. 26,400 amount of salaries. And then we have printing, that is 19200. 19200 amount of printing and stationery. Then we have apprentice fees received 4,800. I think it is adjusted. Yes, 4,800 has already been adjusted. After apprentice fees received, we have bank overdraft, which is your current liability. Here you write bank overdraft. Amount of overdraft is 8,400. Alright guys, then we have bad debts 10,200, and place of it was also reserved. Bad debts 10,200. We have account receivable 192,000. I think we have mentioned it. Look at here 192,000. Then we have provision. It's an old provision 6,000. It was also mentioned. So better to write 3648 over here so that it should not be mixed. Although we can add it in above adjustment, but I thought to keep it in a separate position. So provision was the last element of trial balance. It means all adjustment except this 7 we have completed, and all elements present in trial balance. Look at this, dozens of elements were present every element has been entered in financial statement, showing that we are now ready to start our calculations. First we will see net sales, which will come by subtracting return from gross sales. Now let's calculate part of, okay, this is little complicated and we'll have to be very much careful. So let's start. First we need to add opening stock, then add purchases, then subtract returns, then again subtract drawings, again subtract wrong entry, and then again subtract closing stock. So final amount we have got is 567,600, and surprisingly there is no direct expenses. It means we can calculate gross profit directly. So what we have done, there were no direct expenses. It means no amount was written over here. Simply what we have done, amount of sales less cost of goods sold without direct expenses. Answer we have got 133,800 gross profit. Let's see in the book. So we have got 133,800 as our gross profit, and which is matched. 1 out of 4 parts we have solved. Now let's focus for indirect expenses. Once again I'm letting you know that this stock, maybe we may have to adjust this stock of 1800. Here we will start our calculation for bad debts. First bad debts, then you will add additional bad debts, then you will add new provision, subtract old provision, final answer for bad debts. And here you will calculate stationery, printing, subtract wrongly added, and then add new stationery purchased. For salaries, amount of salaries less wrong entry. It means all operating expenses are written over here. Just this line might be possible we are subtracting our stock. So let's take sum of all operating expenses, and this is total of operating expenses. Then we have operating income, only one item. No other expense means 0. No other income, it means it is also 0. So here we can start our calculations for net profit. For this we will take gross profit less operating expenses, and then we will add operating income. So what we have got, 65652. Alright, so now it means we have 65652 and here 67452. It means that stock of stationery has some issues. So let's see. Here we do have 67452. 67452. Okay, have you seen that? Alright. It means what we were saying, what book writer may have done. So let's stock of stationery, that was 1800, and secondly this stock was written over here, so just remove it. Now we will be updating our entry. stock of stationery. So here you will calculate this is printing stationery less wrongly added, and then add stationery purchase, subtract stock of stationery. So we have got 21,000. So guys, in this way 67452, and net profit given over here is 67452. It means our second part is also completed, where first part was for gross profit and second part is for net profit. Both answers are matched. We will now be focusing upon liability side, and here our net profit was 67452. You will mention in liability side. It means we can calculate our final amount of fixed liabilities, where capital less drawings and add net profit, then again subtract drawings, final amount of fixed liability, because no other fixed item is present in this side. Let's now calculate total of current liabilities. It has also been calculated. Beside this, there is no reserve. It means our liability side is completed, where we have our capital side, drawings are subtracted, net profit 67452 is also written, and there is something still to be written and we'll have to see it. First we will see how much amount we have. 349452, here 349352. No, this is not the amount. Let's see it again. 349452. 349452. That's the amount, and we will see in the question whether we have missed something. Look at this. Account payable was supposed to be written in current liability side. Here let's write it, and this is 60,000. Let's calculate it again. We will take sum of current liabilities. So guys, total of fixed liabilities completed, total of current liabilities completed, there were no reserves, and sum of these 349452, and balance sheet answer over here is 349452. In this way our liability side is also completed, by which 3 out of 4 parts are completed. Now let's focus upon asset side. Machine has plenty of adjustments. Original amount of machinery, then subtract its depreciation, then add wrong entry, again add wrong entry. So here we have got final amount of machine, but there are no other fixed asset. It means this sum would be considered total of fixed assets side. Here we will start our calculation for current asset, and there are only two current assets. That's little comfy for us, and we will add those two current assets to get total of current asset side. There are no investments, so you may write 0 over here. And finally sum of these two amounts, 6870 and 280742, we have got 349452, and our balance sheet answer is 349452. Here you have seen all 4 parts now have been solved. first, second, third, and fourth. First part was for gross profit 133,800, and here you can see 133,800. Let's little zoom. Here you can see 133,800, 133,800, and this was your asset side 349,452, 349,452. And downward we have 67452 net profit. Here 67452. Okay, net profit is okay. Then a liability side 349452. So guys, you can see that all four answers are absolutely matched with the given answers, and it means all adjustments and all elements of trial balance were entered. One thing very important we have learned today, that if you have doubt whether it can be an asset, or secondly stock of stationery was we can subtract from operating expenses, both were good. They were absolutely okay. And please note carefully, if we were doing to write, if we were writing stock of stationery on current asset side, in that case balance sheet was also becoming equal, and there was no doubt. But since we were supposed to match these answers, that is why we'll have to see what writer have done. So writer had chosen the second option, where this stock was to be subtracted from indirect side. So it happens, you must have been your mind very broader. All options which are truly according to accounting principle can be accepted. But please note, do not change position of any element without having complete idea of accounting principles. So here our question has been completed, although all elements, all adjustments we have discussed, not only discussed, we have practically written these adjustments to their proper places. Question has been completed, although solution is in front of you, but do not leave it just by listening or just by viewing. I am requesting you to practice this question by yourself for more than 3-4 times. And after practicing, if you still feel that there is a problem in understanding, please share your problem through messages, text, comments, or you can directly meet to share your problem. I will humbly be trying my best to answer your question quickly. So guys, thank you very much for your time. It's time to end our lecture and it's time to say goodbye. Allah Hafiz.